Hi everyone, welcome to the video. Today we'll be focusing on Bitcoin and Ethereum. We're doing dollar cost averaging for the two, which asset has performed better in recent years, and how dollar cost averaging could work moving forward. I'll touch on lump sum investing and buying in the dips as well, but DCA is the focus of this video. Going to my slides with the relevant information. Before I continue, a quick disclaimer. None of this is financial advice, and I'm not a financial advisor. Another thing as well, a way to help support this video is to give it a like or leave a comment if you want to help promote this content or my channel. Okay, let's begin. Before I talk about the statistics, a quick overview of DCA. So this involves investing the same amount of money at frequent intervals. So for the purposes of this video, $200 monthly over a given period, regardless of the asset's price. When you look at the relevant statistics, a few things to factor in. Firstly, you need to consider the exchange fees depending on the platform you're using, currency conversion fees if relevant for you, and this is generally the case for smaller capped cryptos. For example, you look at the VeChain US dollar pair, but you want to purchase with Australian dollars, so there's most likely going to be a fee involved there. Withdrawal fees when you eventually cash out your crypto, or at least a portion of it, and then miscellaneous costs and other variables on top of, or last but not least, inflation. So for this video, I've excluded inflation. As the focus is on Bitcoin versus Ethereum, that won't actually have a bearing on the final outcome, comparing the two side by side. Okay, moving on to the related spreadsheets, and I'll begin with Bitcoin to give you a quick summary of how I've approached this. I've taken the closing prices as of the 15th day of each month, so $200 per month. We've got 3 years involved, 2018 to 2020. So the figures you see here are based on the historical data at CoinMarketCap. For the final tab, we'll also look at the overall profits or losses made over the 3-year period, so 36 installments in total. To keep this concise, just summarizing the performance for each year. Bitcoin had a bad year in 2018, and just to give you some context, towards the end of 2017, we had the major run-up, and then it started dropping rapidly at the beginning of January, hence the major drop you see here in the first 3 months. If you use dollar cost averaging $200 a month, and then you decided to sell on the 20th of December, and I've done that for the remaining years, you would have lost 38% based on this. It's about $920 lost for the year. But we fast forward to 2019, you adopt the same strategy, a different result, although modest gains as opposed to 2017, and as you'll see shortly with 2020, was a very strong finish to the year. So based on these 2019 figures, the $2,400 invested would have led to a $345 profit. Now, if I go to 2020, some decent profits if you decided to cash out in late December. Based on this, the $2,400 invested would have produced $5,871, a profit of about $3,471. So you've more than doubled that investment purely for 2020. Overall, for the 3 years, the $7,200 invested would have led to a total Bitcoin value of just under $31,600, so a profit of $24,400, so 338% gains or thereabouts. And how I've done this, just for those not looking at the screen, I've gone in with the assumption that after you did your 36 installments, a couple of weeks later on the 4th of January, I took the closing Bitcoin price was just shy of $32,000 per BTC. So I got the total amount of Bitcoin purchased over the 3 years, just under one whole Bitcoin, and that's how I get the profit. So overall, that's a good performance. Shortly, we'll have a look at some of these statistics on a line graph and how they compare with gold and some other assets as well. Now, moving on to Ethereum and jumping back to 2018, just like Bitcoin, it started the year very strongly as it was tapering off from the major drop of that huge bull run in late 2017. A clear distinction here, the price of ETH dropped a lot lower than Bitcoin. So as a result, towards the end of the year, adopting the DCA strategy, you managed to purchase a lot more ETH at the end as opposed to the beginning by a significant margin. And that could be useful if you held on to it. But assuming you decided to cash out a few days after the 12th installment at the closing price of $116 per ETH, you would have actually lost 60%. So a very negative year in relation to historical performances. 2019, a negative result once again, but not as drastic as 2018. A total of 14.11 ETH were accumulated, but you've still, again, if assuming you decided to sell, that's a 24% loss or $578 down. But the situation completely reversed last year. where, as we can see, and factoring in as well, I will mention Ethereum over the past few days in early Jan has had an incredible run up. Things started to pick up from about July, so we got prices up into the 500s there. For most of this 3-year period, you've been able to purchase the whole Ether. So for 2020 alone, the $2,400 invested, just under 10 Ether purchased, your investment would have reached $6,330, so a profit of just under $4,000. But looking at the combined data for the 3-year period, if you take the closing price 2 days ago, and as you can see, a huge run up in price from the 20th of December up until the 4th of Jan, so that 2-week period, at one point it almost doubled. It's showing how volatile the prices were. With 32 ETH accumulated, selling at just over $1,000 each, you would have made $33.5 thousand. Well, in profit, that's $26.3 thousand from the $7,200 invested. Now, which one is the winner? Looking at the two. So Ethereum, going to Ethereum and Bitcoin side by side. Now, an important consideration to make here, because of wild fluctuations in the market over the past week or two, this can vary considerably even if you're a day or two off, or based on when you choose to sell, again hypothetically, all of the crypto. So for those not looking at the screen, as a summary, over the 3 years you would have made just under $24,400 in profit for Bitcoin and $26,370 for Ethereum. So this side-by-side comparison, Ethereum is the winner. I think most of us would be fairly content with such a high percentage gains. Looking at this summary reinforces how things can change considerably in such a short period of time with crypto. 2018 and 2019, people were absolutely rubbishing crypto. They were criticizing, people were mocking us, disparaging us. And now a lot of these critics, I think we've put them to the side. Or those individuals, especially those of you who have held on for this long and you've kept on stacking your sats, or you just keep on building that bag of ETH, well done. If you're just entering the space and you're exploring or contemplating the option of doing dollar cost averaging for Ethereum and Bitcoin in 2021 and possibly the following year, I still think it has its merits, but as these prices have appreciated in value quite a bit in recent weeks and months, it won't be as profitable as it once was, although there's still room to get decent gains on the top 2 cryptos. Eventually, I would be exploring other cryptocurrencies that have medium to long-term potential and are good alternatives. I cover that in separate videos, but in the grand scheme of things, I still believe we are relatively early to this asset class. Just my thoughts, not financial advice. Moving on to a few DCA-related websites, and the first one is DCA BTC. If you want to plug in your own data that corresponds to your situation, and they've got this comparison with the Dow Jones Index and gold. So I've plugged in the numbers that match my spreadsheet, and this is what we get. For those not looking at the screen, to put this all into perspective, we got the late surge in Bitcoin's value from about October last year up until now. But if you were to extrapolate this, as I had on the spreadsheet, if you were to cash out in early January, this would be at about triple the value of gold and the Dow Jones. Moreover, if you imagine that the Bitcoin price could potentially get to 50K, 60, and maybe at some point $100,000 per coin, the gap gets wider and wider, and there's more of a compelling argument in favor of Bitcoin. At some point, I imagine they will incorporate Ethereum and possibly Litecoin and other assets. If we move along to costavg.com, Ethereum, Litecoin, and Monero's there as well. Okay, so calculating all of these figures, and as we can see, just as shown in the previous graph, the value of Bitcoin invested has shot up considerably. What I'm curious to see is, for how much longer could this parabolic growth be sustained? Not financial advice, just to reiterate this, I would comfortably say $100,000 minimum by the end of this year. Possibly, you never know, maybe even the 200K mark. We'll start celebrating then. But anyway, let's not get too ahead of ourselves. We're just 1 week into 2021. What do you think about potential end of year prices? I look forward to your feedback and your comments about this. Anyhow, I digress. Alongside the line graph, you have the monthly profits or losses for the respective dates when you did the dollar cost averaging. So all of the relevant information there, courtesy of CostAVG. So thank you to them and DCA BTC once again. Now there's one more before I forget. And this is a shout out to Jan. I received an email from him a few months ago. He gave me the quick spiel about this. And it's called Delta Badger for those not looking at the screen. Just to clarify as well, this is not, and nothing in this video and any of my other videos is paid advertising. Here is the website. If you like it, check it out. The good thing is, as time progresses, I expect more of these websites to pop up. It's going to become even simpler. You can then compare other crypto assets and see how some of the major ones compete with each other, how they perform relative to conventional assets as well. Now, before I forget, I did say at the beginning I will allude to buying in the dips and lump sum investing. I'll give you some of my input. Buying in the dips has its merits, and if you can time the market well, it is a very good strategy, and it would beat dollar cost averaging. The problem is, often you would need an intermediate to advanced level of technical analysis understanding, or just a moderate to solid grasp of the markets to be able to correctly judge when is a good time to buy the dips. I just want to quickly go back to the spreadsheet data and looking at 2020. With the whole global situation, well, back in March, we had the major drop, not just in Bitcoin, but all of the markets pretty much collapsed. In this case, it would have been a wonderful opportunity for people to get involved. So with Bitcoin dropping to $5,400, actually went lower than that, but specifically looking at the 15th of March. And then with Ethereum dropping to $125, so 85 to 90% down from where it is now. And that's in less than 1 year. So back to the slides. In that instance, you also need to ensure that money that you can afford to lose, having the surplus that you can throw into Bitcoin, Ethereum, or whatever asset once it drops in price considerably. The next point here, where it says high volatility double-edged sword, this would pertain more to trading. Now, the point I'm making here is, with the extreme volatility, if you see a price collapsing rapidly and you think it's going to bottom out, you then decide to buy, but then the price continues to drop. You start to panic and then you don't make sensible decisions. The important thing here is you need to know what you're doing and remain calm and ensure that you're making rational decisions. This ties in with the above mentioned point about having a moderate to advanced understanding of the market, because at that point you're generally best equipped to deal with this insane volatility in just 1 day or even less than that. Buying in the dips will be more complicated than dollar cost averaging. The alternate scenario as well is lump sum payment. You throw the $2,400 in all at once. In an ideal world, when the price tanks, you hold it, you sell at a profit, you'll be very happy. Concluding thoughts, generally the prices tend to move upwards and DCA is not necessarily the best option. However, DCA mitigates risk, so this could be more appropriate for newer or risk-averse investors. I use that in air quotes because I acknowledge crypto is risky and highly speculative nonetheless. So the question I have for you is, for how long are you willing to hodl? And the price predictions for the end of year, again, feedback, all welcome. I encourage you to have a good discussion. Bitcoin and Ethereum did pretty well, even when you adopted a dollar cost averaging strategy. Of course, not as profitable as buying in the dip and then holding, but we're all different. What works best for you, I say stick to that. And at the end of the day, you should have skin in the game. I think everyone, to a varying degree, you should have even a tiny amount of Bitcoin and Ethereum. It's better than just sitting on the sidelines, constantly complaining about crypto. Having something is better than having nothing. But to wrap up the video with a quick market update, due to the very dynamic nature of the crypto prices and the entire space, I have re-recorded this section because, firstly, before I talk about the prices, a new milestone was hit. This was a couple of days ago. On the 7th of January, the overall market cap eclipsed $1 trillion US. And at this rate, looking at the market cap of Bitcoin, it is 740 billion. I would not rule out a 1 trillion MC by the end of February if I had to make a guess. At this rate, there will be a bit of a pullback. But anyway, onwards with the prices, focusing on the major cryptos. Bitcoin at just below 40,000. It did hit it, actually on a couple of occasions, it's hit it over the past 2 days. So 39,770. Ethereum just above $1,200. It's had a very good week, 63% up. XRP, it's finally picking up again. It's up 34% of the week. Most of the gains came about 2 days ago. Litecoin still holding fairly strong. It's about $167, 32.8% up for the week. ADA Cardano had a very solid 7-day period. It's up 73% over the past 7 days. Pretty much stable over the past day or two. Polkadot, it hit $10 a few days ago, but that's dropped since. It's at $9.18. Stellar, an incredible week, 29 cents. That's really picked up. Back in the top 10. Binance Coin, just under $42 per BNB. Chainlink at $15.39. So it's still holding fairly strong. It had, I think, its all-time high is at about just below $20. So keep an eye out for that one. Going down the list, just a few more. VeChain is up about 40% for the week. Neo doing fairly well, just below $20. Scrolling down the list, Dogecoin, an honorable mention as a very, I almost never talk about it. That had some incredible gains last week. Its overall market cap of 1.3 billion or just below 1.3 billion US dollars. Aave doing fairly well, $111. IOTA picking up again. Actually, IOTA has done very well today, up 14.5% and 43% for the past week. And well, that's about it really. If you enjoyed the video, give it a thumbs up. Subscribe if you want to stay up to date with my latest content. If you have something to say or you just want to say g'day, by all means, leave your feedback in the comments section. I hope you're all having a wonderful morning, afternoon, or evening, wherever you are. More videos coming soon. Stay safe and talk to you shortly. See ya.